Greetings, members one and all of the Salivation Nation. Forget the hostile bid. It looks like everything is going to work out for Barrick Gold, the biggest gold mining company in the world. This comes to us from Coin World magazine, shared with me by Donald in New Mexico. Barrick Gold has dropped its hostile bid to acquire Newmont Gold. Firms Inc. joint venture to unite assets for gold mining in Nevada. So rather than Barrick Gold continuing its $18 billion bid to acquire Newmont Mining in a hostile takeover, the two mining concerns have inked a joint venture agreement that will unite assets from both companies in pursuing gold mining in Nevada. The firms report the venture will allow the combined annual production of more than 4 million ounces of gold, the firm said. As a result of the joint venture, Barrick will own 61.5% of the venture and Newmont 38.5%, with Barrick serving as the lone proprietor. The agreement between the two gold mining giants comprises Barrick's Gold Strike, Cortez, Turquoise Ridge, Gold Rush, South Oruro mines, and Newmont's Carlin, Twin Creeks, Phoenix, Long Canyon, and Lone Tree sites and associated processing facilities. The joint venture agreement does not include the development assets such as Mike, Fiberline, and 4 Mile, although they could be investment targets in the future, according to Barrick and Newmont sources. According to a joint news release from both companies, following the completion of the joint venture, the Nevada complex will be the world's single largest gold producer, with a pro forma output of more than 4 million ounces in 2018. 3 Tier 1 assets, potentially another one in the making, and 48 million ounces of reserves. The joint venture is an historic accord between the two gold mining companies, which have operated independently in Nevada for decades, but have previously been unable to agree in terms of cooperation. The joint venture will allow them to capture an estimated $500 million in average annual pre-tax synergies in the first 5 full years of the combination, which is projected to total $5 billion in pre-tax net present value over the 20-year period. Barrick President and Chief Executive Officer Mark Bristow said the agreement marked the successful culmination of a deal that has been more than 20 years in the making. We listened to our shareholders and agreed with them that this was the best way to realize the enormous potential of the Nevada goldfields, unequaled mineral endowment, and to maximize the returns from our operations there, Bristow said. We're finally taking down the fences to operate Nevada as a single entity in order to deliver full value to both sets of shareholders as well as all of our stakeholders in the state by securing the long-term future for gold mining in Nevada. Gary Goldberg, Chief Executive Officer at Newmont, said the logic of combining the two companies' operations was compelling. This agreement represents an innovative and effective way to generate long-term value from our joint assets in Nevada and represents an important step forward in expanding value creation for our shareholders, Goldberg said. Though the joint venture, we will also continue to pursue the highest standards in safety along with responsible and meaningful engagement with our employees, communities, and other stakeholders. It'll be interesting to see how this plays out. This is the revised guidance. This is from a mining.com. It just has a pulse of all this. It says, in the aftermath of the joint venture agreement with Newmont Mining Corp earlier this week, Barrick Gold has taken steps to revise its production guidance for 2019. Executive Chairman John Thornton and CEO Mark Bristow are currently traveling to update shareholders on the company's post-JV operations. Barrick's merger with Randgold Resources Limited created significant value for shareholders, and the Newmont joint venture should do the same, Bristow said in a statement. Following its $6.1 billion merger with Randgold in January, Barrick set a bullish guidance for 2019, forecasting a double-digit jump in output. 2019 guidance is currently set at 5.1 to 5.6 million ounces of gold an over 13% increase over 2018 levels, at all-in sustaining costs of $870 to $920 an ounce for all-in sustaining costs. That's important. And, and that's going to be something quite interesting to see how that's going to play out in the coming years with this merger. Company officials expect this 5-year gold production to be within that range, with costs expected to decline below the bottom of these ranges. My guess is they can make it more efficient to do that. That's great. But the thing is, when you have an all-powerful company like this, then they get in bed with the government. Who knows? That crony capitalism is what I'm really kind of worried about here, and monopolies as well. We are engaged in reviewing the impact of the new JV and our guidance for both 2019 and 5-year outlook, with expected to provide an update during the year. So you think about it, all-in sustaining costs between $870 and $920 an ounce, and what will that be, and how could those numbers change over the next 5 years? Now, obviously, there's a lot of things that could come into play, fuel costs being the biggest impact, but also the declining value of the dollar, among many other things that come into play. And with a big corporation like this, because of all those factors, it seems like it'd be very easy to fudge the numbers, but I may be speaking out. That just seems to be a concern that I would have anyway, considering such a thing. And there another talks about the new Barrick touts a Nevada complex of gold mines as being in a league of its own. And here we see this little graphic that shows their holdings here. Very interesting here. Donlin Gold, 50%. The Nevada complex, we mentioned earlier in the other article, that is 61.5% ownership there. This is what they're producing right now. You look at all the areas in Nevada. There's a lot going on there. Hemlo. You've got Pueblo Viejo. They got 60% there. And then all these other areas here. We got projects in South America. And in West Africa here. You've got some other areas here. Very interesting indeed. All these different places. Acacia. 63.9% Barrick. They've got copper production as well. These other areas, including Saudi Arabia and South Central Africa there, nations there. Very interesting. And then they've got mines in Indonesia, and you've got in Australia there. Very fascinating. Interesting indeed. So that's the merger roadshow. It's going to be fascinating to see how this all plays out. And here's their guidance, talking about, again, the $880 to $940 per ounce. Cash cost of $650 to $700 an ounce. And all-in sustaining cost of $870 to $920 per ounce. So we currently expect our 5-year gold production and cost outlook to be within that range. And so, yeah, it's gonna be interesting to see how this plays out. What are your thoughts about this? I think it's gonna be, it may be good in the short term, but I worry about the long term. Such a huge presence of gold, they could literally, who knows what they could do with all that power as being the largest gold producer and miner in the world. With major shares in all these different areas. Will there be some sort of way to check it, to check what they're doing and, the costs and how will it affect the spot price for gold in the coming years, and how does it affect it right now? Those are legitimate, genuine questions I have, not being as familiar with the mining agencies and how this stuff, but it just concerns me to see this kind of thing occur, and they're gobbling up these other, or these quote joint ventures, and acquiring, and how this is going to play out in the long run with this. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, comment, and subscribe.